Each year, Australians claim about $30 billion in total deductions against their income. More than half of those are work-related expenses, and a big chunk is for their car. They're now under increasing scrutiny by the Australian Tax Office, but they're not the only claims in their sights. The ATO is getting smarter.
This year we expect to contact about 350,000 people about errors and omissions in their tax returns.
Better technology means virtually every return is scrutinised.
We have some fairly sophisticated algorithms
to make sure people claim only what they're entitled to. There are 3 golden rules when claiming work-related expenses. You need to have spent the money yourself, it must be work-related, and you need a record to prove that you spent the money.
A new tool that we have in our ATO app called My Deductions, and it really makes that easier. People are able to record their deductions on the go.
The ATO will also continue to crack down on rental property owners, with more than 100,000 of them contacted over the past year to clarify claims made.
For example, where someone has a loan, their property has increased in value, they've gone out and got a further loan and tried to claim a tax deduction on that increased loan. But quite often what we're seeing is people have used that loan to buy a car.
Holiday homeowners will also be under watch.
The thing to remember is that you can only claim costs proportionately for the period of the tax year that the property was rented out or genuinely made available for rent.
The rise of the sharing economy, services like Airbnb are also on the ATO's radar.
They need to return any income that they get from these things that they're putting in place in their homes.
While larger businesses can expect to be audited every 4 to 5 years, there's a better chance smaller ones may be left alone if they follow some guidelines.
Lodging your tax return on time, paying your tax on time, meeting all those little obligations.
Though that doesn't mean you can't maximise your return.
There's a lot of people who underclaim their depreciation either on things that they're not using anymore in the business or just at lower rates than what the tax office would allow.